Hi everyone, you're all very welcome to another market update here at the Alpha Capital Group. So of course, looking yesterday, we talked about the run through or the run into the Fed FOMC meeting last night. We had some significant volatility across the board, particularly into the close after kind of the Q&A had ended or close to the Q&A ending, right through into that kind of session close. We really did see risk aversion come back into the markets. Indices dove off. We had that massive rally in gold prices as well, and we actually saw some strength into weakness and back into strength again on the dollar as well, broadly speaking. So today we have obviously the ECB this afternoon in a couple of hours time, and really kind of gauging as well the volatility associated with that, because of course we have been looking at European policy very, very closely from an analytical perspective in recent months, and we can see that the ECB are also expecting to raise rates today as well, to match, at least match, if not greater, that of which the Fed is currently doing. Now, obviously, you look at the last 12 or 18 months or so, the Fed has gone from a zero rate policy, should I say, to 5.25%, where we're currently at now. And I think it's really starting to signal that the idea of a rate hike pause, consolidation at this 5.25% level until it really gets these rates moving lower. We talked about that briefly this morning in our little update in our Discord as well community. Now, if you're looking at some other aspects, the comments last night, and this is obviously something really important. The Fed has been saying that everything overall, the system is still quite strong. Yet you look at the market caps for the financial sector, the US banking sector, and it's crossed through 2.5 trillion in losses this year. And you only have to look at the after-hour performance, courtesy of the Kobasasi letter. PacWest down 60%, Western Alliance down 30%, Metropolitan Bank also down 20%. So it shows that the system isn't as strong as they think. We talked about it yesterday, that lower growth dynamic. Obviously, the inflation narrative, they're trying to get through to that. But of course, Friday's NFP tomorrow will become very interesting, and we'll do obviously a quick video after the data has come out. Again, in our Discord, we probably will upload it to our YouTube as well in a short section. So obviously, bringing our attention now to the ECB today, broadly speaking, is now the next, I suppose, fundamental narrative in these markets at present day. ECB coming on the board at 1:15, which is again a couple of hours time from now. We are looking for a 25 basis point increase by the ECB. Now, given the RBA rose by 0.25% or 25 BPS on Monday night into Tuesday morning, the Fed also done so. Last night, we are expecting the ECB to at least do 25, with a smaller likelihood of a 50% hike. Now, I don't think 50% is in the market, but however, should we get a 50% or 0.5%, 50 basis points, should I say, in the rates by the ECB today, we should be expecting euro-dollar strength to continue. And that merry train of euro-dollar movement way back from the early parts of the year when we're trading below parity, 95, 96 into that parity level, should really be looking to continue to the upside. So having a little bit of an alignment on the fundamentals, the differing cycles of where central banks are. So we know the Fed is now stopping its rates or ending its rate hike cycle, whereas the ECB is still well behind the curve. So if the ECB is still well behind the curve, then we should be looking for further increases in ECB rates over the next number of months or so, which really could see the ECB going from where it is today around about 3.5%, depending on the different rates, whether it's the deposit facility or the refinancing operations or repo ops. Then you're really looking at that really going higher up to probably 4.5%, 5%. So another 1.5% is going to add in more strength into the euro over the next, let's say, 6, 12, 18 weeks or so. And we could be looking for that euro trend of bullishness from a fundamental perspective to continue as well. So of course, the ECB Lagarde will be speaking at 1:45. So we've got kind of a raft of data either side of the waters this today. We've got ECB at 1:15. Then we have US data at 13:30, 1:30 p.m. GPT time. And then at 1:45, the press conference will come in with Lagarde speaking. And then, of course, we have the US session open, and of course, leading into that as well. Now, yesterday on the economic calendars, Lagarde was meant to speak twice, but according to sources today, she is actually only going to be speaking once, and it is obviously prior to the US Open between 1:45 up into that 2:30 p.m. UK Open for obviously UK time for obviously the Wall Street Open as well. So just obviously kind of gauging that as well. Some really important elements really to be considered in terms of forward guidance. So we know obviously the ECB is lagged behind the different PEP or refinancing operations. We're expecting updates on that as well. And of course, just the broader refinancing deposit facility rates as well, monitoring that situation very, very closely. And of course, we'll have a lot of information to share with that as well accordingly. Now, if we look at where we are in the terms of the price action, gold had that massive rally yesterday into obviously the session close rollover. And we had actually that kind of gap higher as well last night. So of course, has been aware of that. This is where we were trading yesterday when we looked at it. We said any break of 2020 was really going to allow price action to have that run up and try and take out these highs 2045, 2050. And we actually superseded that by breaking higher. And you'll see overnight we actually came as high as 2065, 2070, or very, very close to those levels. So massive volatility in the gold markets is definitely witnessed. Now, of course, from here, all eyes is really going to see where does the dynamics play from there. Can we get this grind higher? Can we continue evolving to the upside in gold? Well, if you look at the daily candle today on gold, we're starting to see a little bit of profit taking, and it's topping out here underneath this 2050 level. So this 2040, 2050 level, I think won't just become an interesting area today, but also tomorrow, right? We know traditionally speaking, NFP gold tends to be a volatile mover in the assets, in the markets more broadly. So I think it's really worth being very, very close to the eye on gold this week to see whether we actually close at these highs or whether we actually see a little bit of a run off. Potentially NFP tomorrow could be the catalyst for a little bit of a rejection, but also at the same time, it could be that little break that we need to actually break through these highs and continue progressing to the upside. Now, of course, DXY, you're looking at that DXY move. So obviously with that stronger gold move last night, we've seen snaps of dollar strength. Obviously, we talked about yesterday into dollar weakness, follow through last night into more dollar weakness, where we found a little bit of a bottom again in the dollar weakness this morning, overnight at this 101 level. We talked about it yesterday. We're back at this 101 level, and it's just about holding on to these lows. Now, of course, with the inverse of the DXY. So if you're looking at DXY, well, the DXY, the basket of the DXY itself, the actual rating of the dollar is geared against 6 other currencies, and the euro holds almost a 60% weighting, a 57.6% weighting of the DXY. So naturally enough, over the next number of weeks, if we see that euro continue to grind higher with maybe a continued outlook and bullishness by the ECB from a fundamental perspective, then you're most likely looking at the DXY potentially breaking through some of these levels. So it's not just about price action. You do just have to be kind of wary of some of these fundamental, I suppose, scenarios that's being presented by the likes of the ECB, by the likes of the Fed, obviously, in terms of where they are within the hiking cycles within these markets as well. So just please be wary of that as well, because the DXY is holding on to this 101 level. But of course, if we see bullishness from the euro today, most likely we could see the DXY actually break through this level. All right, just being wary of that one. Cable as well, from where we were yesterday. So we talked about this value area yesterday. We had that quick run up, and we had that little bit of a pullback. Now, we didn't quite get as deep as I would have liked. Me personally, I was looking for kind of a run down back into this kind of 60, 70 level. We didn't really get there. We topped out at or bottomed out at around 85 yesterday off the back of a preview into obviously the FOMC. And we had that massive rally then through the course of the afternoon, evening time, which done fairly well actually broadly, considering that we actually thought that there might be that much volume. And we are sitting at, again, close to session highs. So again, keeping an eye on USD today. If the USD weakens, ECB weakens, you could very much ECB strengthening, should I say it, with dollar weakness. You could very easily see euro dollar and cable breaking through some of these levels. And of course, if you're looking at euro dollar as well, we had that initial rejection from just underneath 111 in the Asia session, or end of Asia session, beginning of European session this morning. We have come back into this kind of 110.40, 110.50 level. So from an order flow perspective, it'll be interesting to see whether we come back into some of these deeper levels down here around 109.60, 109.80, or whether we actually continue progressing higher. And that, of course, will be very, very interesting to watch in the midst of the ECB come 1:30, and of course into that 2:30 p.m. US session open as well from here in the UK. So that's effectively where we are. We talked about it USDJPY yesterday as well, that massive runoff. We said the likelihood is we're going to come back into this kind of 134.50, 134 level. Now, we've seen some fairly strong wick reactions from this zone to a T, right? We haven't quite come down into the absolute lows of the liquidity zone, but we have come fairly well into the retracements areas of that. And we actually have come off this 707 discount zone as well this morning. And if you look at it from a 1 hour perspective, we have started to form a little bit of a bottom. So there's a little bit of consolidation here. We wicked lower, very, very sharp reversal, taking out the latter end of the Asian range. We've come back down to take this short-term liquidity as well. So if you're seeing that on a 15-minute as well, you can see this present out very, very nicely. Consolidation, taking of lows, taking highs of range back into value area. And it looks like now that USDJPY is probably going to start moving higher. So worth keeping an eye on that one. I think yen weakness as well has been the fulcrum of a lot of market movements. So euro yen, pound yen, USDJPY. So although we could potentially looking for a weaker dollar, you also have to factor in that a lot of these FX pairs, there are two sides to obviously be engaging and watching out for very, very closely. Now in the S&Ps, we talked about this morning in that very, very quick run through, massive sell-off yesterday, back into April month lows and through lows. So we're basically sitting at April month lows at this moment in time. And really all eyes to see, does this actually give way today, or do we actually see a little bit of a bottom coming through? So indices were under pressure yesterday. The DXY unusually under pressure also. Euro saw some movement to the upside, but of course, gold prices rallied as well. So you're just looking all of these different moving parts, all of these different assets, depending on what you're trading within your strategy, and that's obviously quite important as well. Also in the Dow Jones, in that asset, just while the assets are loading here very, very quickly, Nasdaq has remained very, very choppy. So of course, like with the S&Ps, the Nasdaq also sold off quite heavily. Now you're looking at this yesterday. This was kind of the broader right. This is where the Nasdaq has been over the last number of months, right? Or last month or so in particular, right? From the 3rd of April right through to kind of where we are now, 4th of May, the markets, Nasdaq has just been up and down in a range. Now, if you isolate the current cycle, this short-term cycle, we've very quick selling on Tuesday, into a dead cat bounce recovery on Wednesday. Very, very clear optimal selling that was visible in these markets yesterday off the back of the FOMC, creating new short-term lows in this type of structure, or creating a bottom. So me now personally speaking on the Nasdaq, I'm looking to see if there's any sort of pullback against this sell-off that took place last night. See if we can mitigate that kind of order flow move that we saw last night off the back of the fundamentals, mitigate the order flow, take that out, and then see if we can actually see another leg lower come from that, broadly speaking. So it's just all about having that composure, above all else, having that composure, being consistent with your entry requirements, and just making sure that you're not over leveraged, over risked, that if there is a little bit of volatility, it's not going to completely take you out. Now, of course, yes, on the rollover last night with the volatility in gold, there was gaps higher, and we have seen traders affected by that. But of course, you have to know when markets are opening, markets are closing. You have to understand when these rollovers are. And of course, you have to understand the nature of the volatility that you're trading in. I think a lot of traders as well can sometimes get blindsided by the sheer increase in volatility, and then unfortunately they're left licking their wounds beyond that. So similarly, again, lastly, in the US, moving across to the Dow Jones very, very, very quickly. Again, it's replicating what we're seeing in the S&Ps, trading at April month lows. This area here around 33,200, 33,300 is really going to be the fulcrum point for the afternoon into the ECB, into, of course, the back end of the trading day beyond 3 o'clock European close, and then into, obviously, tonight's US session close. Now, tonight as well, we also have the Amazon numbers. So that's obviously something we haven't mentioned yet in today's call. Amazon reporting its numbers today. And of course, we've looked at previous earnings reports in previous weeks. And you'll know by looking at the likes of Slick Charts or some of these websites that Amazon is one of the most heavily weighted stocks, individual stocks within the likes of the S&P, within the Nasdaq as well. So please be wary of the volatility between that 9, 10, 11 p.m. rollover as the earnings comes out, into daily rollover, into the beginning of Asia session, where the volatility is going to be choppy, but volume is also going to be narrow as well. Otherwise, again, just traders can potentially become blindsided by not being fully aware of the full market conditions that's being presented by themselves at that given time as well. Now, in Europe, if we go back into Europe, just looking at the European indices, like, for example, the FTSE, the DAX, and the Euro Stoxx, the FTSE train to the downside is very much continuing. We talked about it last week, very much elongating to the downside, very, very clear order flow. And the FTSE at the minute is actually proving to be really, really beautiful price action, because we're just getting these cycles up and down, and we're really looking to see kind of where is this going now. Well, if you're looking at FTSE at the minute, you're probably looking at more downside. We've had a very, very sharp reaction in March from this 73.50 level. We are coming into a midterm area here around 76.50. I would not be surprised to see FTSE trade into the 76.50 level short term. I think longer term, we just kind of have to be wary that could we actually see more selling bias back into these lows down here. Well, I think only time will tell with that one. But if you're looking at short term order flow, let's say the 1 hour charts or anything associated to that, you can see some very, very, very clear breaks. We have obviously very, very clear break on end of Monday into Tuesday, consolidation into the FOMC, clear sell-off last night, a little bit of a dead cat bounce recovery, fairly tame recovery. Didn't quite get back to the value area here. So this value area around 77.80, 7,800 wasn't actually physically mitigated. We did come quite close to it though, and markets have actually moved lower again, creating that fairly bearish open this morning on the London Open, and indices again turning south. So that's really the narrative for the day. It's just a lot of those indices really holding on in US, European indices like the FTSE definitely leading the way to the downside. And if you look at the Dow Jones as well, or the DAX, should I say, DAX is just about holding on to this 15,700 level. Again, like the S&Ps at the April lows, like the Dow Jones at monthly lows, if you start to see some of those levels breaking, the likelihood is you're going to see some fairly negative fundamentals coming through. Simple price action, simple sentiment analysis will probably state then that the markets could very easily be moving lower. But until we break those areas, just be kind of mindful of that. You're looking at 1 hour here as well. You're getting that kind of just hovering at the area, but we're creating a clear bearish price action with lower highs significantly. So once this is broken, then you're obviously looking for that continuation to the downside. And of course, with the Euro Stoxx, last but not least this morning, Euro Stoxx is also moving lower. So of course, that's kind of the narrative as well. Order flow very much continued to the downside. We talked about it yesterday. New lows successfully. Didn't get back up into this 43.50 level. Topped out at around about 43.30. And since then, last night into obviously FOMC, daily rollover, we've seen that kind of 50-60 point sell-off in Euro Stoxx as well, which shows that there's about a 1.5% sell-off in last night's indices across the board. So volatility is right today. Just be wary of some of these levels. Just be wary of the fundamentals. But more importantly, be wary of your risk, right? Risk, if you're trading proper, trading private, your risk is your paramount. You have to be focused on that. You have to be aware of the current market conditions, the circumstances that could happen. Always mitigate the downside. Always have that approach of capital preservation, because the more control you have in your risk, the better you're going to be in your decision-making process, and the less likely you are to have those breaches or have those, let's say, the losing streaks or drawdown periods of time. All right, so that's pretty much where we are for today, everyone. So trade safe today with the ECB. Of course, we will be back tomorrow. We've got NFP tomorrow. So we will be back in some sort of capacity tomorrow to probably do a run through after the NFP. Now, of course, if we actually quickly look at the NFP just before we finish up for today, the NFP numbers for tomorrow, the non-farm payrolls is around about 180k. Previous figure is 236, so they're looking for a revision down of around about 60,000 jobs. I think really anything under 150 is negative. I think from an NFP number, anything above, let's say 200, I think is a positive number. So I think that plus or minus 20,000 on the NFP data, I think is going to lead to some decent numbers. Keep an eye on the unemployment rate as well. The 3.5% is really, really important, because that is something that the Fed watch very, very closely. And Powell mentioned last night as well, of the 3.5% and how the actual job numbers is holding up fairly strong. Now, whether you to believe these numbers or not, that's another story, but just taking these numbers on face value. And I suppose the last point in that is also looking at the wage inflation, because of course, if price stability is coming up and inflation is coming down, you might actually start to see the wage inflation start to level out, because of course, normal PCI inflation and price stability is obviously being factored into market conditions as well. All right. So everyone, trade safe. Have a good day, of course. Best of luck for those who are trading today. It's not an easy week in terms of volatility. I've definitely seen that myself last night personally. But of course, be resilient in your approach, and of course, trade safe. Have a great week, everyone.